Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala and thank you so much for tuning in. A good afternoon surely shaping up for the markets as well, because that recovery is what we're seeing coming in the market off the day's lowest point as of now. Look at it, 24,291. So almost coming back towards those 22,300 mark. Interesting to watch out for in the next hour and a half, where this market and recovery is also going to be. Will this sustain? But 0.5% of gain coming in for the Nifty 50. Mid cap, I want to pull that up as well, because mid cap is now trading with gains of almost 1%. So yes, that's something interesting to watch out for. Day's highest point for the Nifty mid cap. Small cap too has moved to the green territory as of now, holding on to gains of almost 0.1% in today's trading session. Nifty Bank, let's look at that and where that is right now as well, because that was also seeing something of a sharper fall coming in. A recovery seems like a slight bit of a recovery that has come in for the Nifty Bank as well. And IT continues to do well, led by HCL Tech, Coforge, obviously leading the charts for the Nifty IT. But that's how the market setup is looking like. But this is a show where we solve all your stock-related queries. And to solve all those queries today, we have our experts joining in with us. Ruchit Jain, Vice President of Equity Technical Research and Wealth Management at Motilal Oswal Financial Services, as well as Sharad, Avasthi, Research Head at SMIFS, to answer all your stock-related queries. Good afternoon, gentlemen. Thank you so much for joining in with us. Let's get started with the queries for today. This first query we have is coming in from Tony Cherian, who's writing to us from New Delhi. He's holding 35 shares, and this is of Tata Motors at a price of 904 rupees per share. And there's one more stock he's holding, that is 28 shares of Titagarh Rail, and this is at a price of 1,535 rupees per share. Wants to know what he should be doing as a long-term investor. Continue to hold both these stocks or get out of the stock? He's making a loss on Tata Motors right now as well. So wants to know the strategy for Tata Motors as well as Titagarh Rail. Let me take this on the fundamentals first. And Sharad, what are you watching out for right now? And both these stocks, how are you placing them?
For Tata Motors, I think it's a decent bet at these valuations now, with the major issue that was around, the Trump administration coming up with tariffs, etc. I think now that is settling down, that maybe it's very hard for them to go ahead with the tariff structures that they had initially announced. So I think it will not be very negative, particularly for the JLR part of the business. The major restructuring, etc., that they had to do at JLR, that's already been done. The cost savings are showing up in the free cash flow generation that the company is doing. And going ahead, I think there is one new launch that has a lot of air around it. So most probably it will receive a very good response. Considering all that, I think, and since the major driver for Tata Motors numbers right now is JLR. So I think the JLR numbers would not be affected so badly as we were expecting it to be earlier. And in that case, I think next year earnings could easily be, anything between 70 to 75 rupees. I don't think it would be very difficult for them to get around 15 times. And the domestic passenger vehicle business and commercial vehicle business is doing good. Even the electric part of it has been doing good. So I think he should continue to hold, 70, 75 into 15. So maybe 950,000 would be the fair value for the stock to start with. And how the numbers shape up and how the business shape up, we can take it on from here. Titagarh, I do not track.
Okay. Your view coming in on both these stocks, Ruchit, Titagarh as well as Tata Motors?
Yeah, hi, very good afternoon. I think Tata Motors, these are not the prices where one should look to exit the stock from the portfolio, although maybe holding in losses, because we have already seen a good price-wise corrective phase over last few months in Tata Motors. And on the long-term charts, it has almost retraced by more than 50% of the previous uptrend. So I think the price-wise downside seems to be very limited from here on. We may see some time-wise correction or consolidation in the short term, but if he's a long-term investor, then I think he can expect a move towards 770, where the 200 MA for the stock is placed. So my advice would be to hold on Tata Motors at current levels. When the stock comes towards 770, that would be a good time to take a review again on the stock. And similar advice of holding Titagarh wagons, also Titagarh rail system would also be there. The stock is consolidating in a range, but if you look at the longer term charts, then this entire range of around 650 to 750 is its weekly 200 EMA. So here also the momentum readings on the weekly charts are a bit oversold and the stock is around its support. So can expect a pullback move in the near term towards 930, 950 kind of range. So these are not the levels where both the stocks should be exited. So I would recommend to have some more patience and continue to hold on the positions.
Okay, have some more patience, continue to hold the stock is the view coming in for both the stocks, Tata Motors as well as Titagarh Rail. But let's move on to the next query for today. We have Siva Subramanian, who's writing to us from Chennai. He's holding 50 shares of Central Bank at a price of 63 rupees per share, making a loss on this one, and 50 shares of Canara Bank. This is at a price of 114 rupees per share. Wants to know whether he should continue to hold this for another 6 months. Sharad, what's your view coming in for both these banks, Canara Bank as well as Central Bank? AU Small Finance Bank just yesterday during its earnings call mentioned about, those MFI issues. Maybe now seems like the worst is behind and let's hope for better days. At least that's the indication coming in there. But for both these banks, what are the views?
Yeah, I think I concur with that view that most probably the MFI as well as, the MSME part of the business, which would be more impactful for these banks. Also, the likes of IndusInd Bank. I think the microfinance business is not so much there into the banks, but the MSME business is certainly there. So I think that improvement should boil down into improvement for these banks also. Yeah, asset quality improvement should be visible. First, let us take Central Bank. I think they have done a lot of improvement in terms of asset quality from 4.5% kind of net NPAs to less than 0.6% kind of net NPAs. But when I look at comparatives, I think maybe it's better off switching even Central Bank to Canara Bank. Because for Central Bank, I can't see much upside from current levels. It's already trading at around one-time price to book. Next year, a 4 rupee kind of a crescent to the book value. And historically, there have been times when the net NPS, gross NPS have gone beyond a particular level. So this time around, they seem pretty well poised. But the upside seems very limited. While on Canara Bank, I think it is trading at around 0.9, 0.8 times. Next year, the crescent could be another, 20 rupees kind of. So based on that, I think Canara Bank is a better story to hold on for targets of around 130, 135, even assuming, one-time price to book, 1.1 time price to book.
Okay, let's get the technical check on this as well then. Ruchit, Canara Bank as well as Central Bank, what's your view coming in? Because both these, at least Central Bank is down almost 25 to 30% in the last 6 months. Canara Bank also similarly is not doing much. It's not seen that much of a decline. But what is your view coming in for both these stocks?
So if you look at the Nifty PSU Bank Index first, then the index made a low of around 5,530 in the first week of March. Since then, in the April, we did see many sectors in the market were forming a new lows, but PSU Bank Index did not went towards the previous swing lows, and rather a high top, high bottom structure has been continued. So we believe that PSU Bank downside seems to be limited from here on, and we should see a decent run up going ahead in the PSU banking space. But it would be very stock specific rather than a broad based rally within the banking PSU space. Canara Bank is still looking better because on the charts there is a start of a high top, high bottom structure. So I would suggest to continue to hold on Canara Bank. But Central Bank relatively is not showing that kind of outperformance which it should have shown in this pullback move of last 1.5 months. Rather, I would suggest to shift to some of the larger names within the PSU bank, such as maybe SBI is another good option, where recently the stock has given a breakout from an inverted head and shoulders pattern, which technically indicates a bottom being formed. So from Central Bank, I would advise to shift to larger names such as SBI, and Canara Bank could be held on.
Okay, Canara Bank could be held on. That's a view coming in from both our experts. And Ruchit has mentioned, maybe you can look at something like an SBI instead of a Central Bank of India. Let's move on to the next query for today. We have Shankar Das, who's writing to us from Hyderabad. He's holding 200 shares of M&M. This is at an average price of 2,647 rupees per share, making some bit of a profit on this right now. Wants to know if he should continue to hold or book out his profits at current levels. Sharad, your view coming in for M&M?
Yeah, I think though the electric launch, particularly 6E and 9E launch has been very successful, and there are a slew of launches around the corner on those platforms. But I think at these valuations, I think the rest of the other companies within the four-wheeler pack look like much better valued than M&M. And considering the type of growth that we expect next year, more or less a flattish kind of earnings. So I believe very little expectation is built in. And it's already trading at 24, 25 times next year earnings. So I don't think there is too much upside left on M&M. unless and until you elongate the view. But even then, I don't consider it as a good bet. So I think it's better you take your profits out of M&M. And as you discussed earlier regarding Tata Motors, I think that's a good bet. Even a Hero MotoCorp on the two-wheeler side could be a good bet. If you want to stay in the four-wheeler space, I think switching from M&M to Tata Motors might be a good idea.
Okay, switching from M&M to Tata Motors, that's a view coming in from Sharad. Your view coming in on M&M, Ruchit, what do you say?
So the short-term momentum seems a bit positive for M&M based on the price volume action. The stock did form a low between 2450 to 2500, where a positive divergence with the RSI was seen. And if we take as a retracement of the recent corrections, then I think in the near term at least we can see the stock moving towards 3050, 3100 kind of level. So for now, I would advise to continue to hold from a near-term perspective around 3050, 3100. You can take a review whether you should book profits over there.
Okay, keep an eye on those levels over there for M&M. Let's move on then to the next query for today. This one is on Jindal Stainless. We have Prasad, who's writing to us from Trivandrum. He's holding 1,000 shares of Jindal Stainless, and this is at an average price of 658 rupees per share. He's ready to hold it for the long term, but wants to know, should he continue to hold or book his losses now and maybe look at some other stock in the sector otherwise? Sharad, your view for Jindal Stainless?
The company is going through an aggressive capex. I think going ahead also, the numbers for the next 2 years could be very promising. They have done some acquisitions as well, some international acquisitions as well. Though in terms of absolute valuations, maybe FY26 numbers, 45-50 kind of earnings, you might be fairly too squarely valued. But considering the high growth, which is absent in most metal stocks, I think this and JSW Steel both would have high growth. So Jindal Stainless would continue to get high growth. And considering that, I think, and since the market would remain favorable, there is a high probability, that this could trade at around 15-18 times forward. Considering that, I think since you're talking long term, I'm considering FY27 numbers. So I think it trades at 18-20 times. You are looking at what, maybe 900 to 1,000 rupees. So if you are a long term investor, I think stay put. 900 to 1,000 could be something, but you understand that it's a metal stock, so cyclicality is a risk because HRC is the major product. So I think that remains a problem. But otherwise, the way they are looking at developing, metallurgy, research and development in tie-up with various organizations. They acquired a company in Spain also. And they are also looking at developing products for defense and new avenues also. So I think it's a very interesting space. They are doing a lot of work around with the railways also, as stainless steel is used for Vande Bharat, etc. So I think they are doing a lot of innovative work. So they might command a better premium. So hold for targets of around 1,000 in around 18 to 24 months.
Okay, that's a view coming in there. An interesting play as of now, and a lot that they're working on is what Sharad has highlighted. But on the technicals, Ruchit, what is Jindal Stainless indicating? Last year, nothing much of a return that's come in, right? And the viewer has averaged out because they're saying average price of 658. It's still lower than that. One, for the long term, what is your target? And should they look to average more at these levels? Is that also a suggestion that could come in?
Well, along with the broader markets, the stock has seen a decent correction over the last 8 to 10 months, where the stock made high of around 840 and is now corrected towards 500, 550 range. If you look at a bit longer term charts, then around 500, there's a good strong support base for the stock, which was not breached, at least till now in this recent corrective phase. So I think the price-wise correction has already been done. There could be some near-term time-wise correction since the stock is also trading below its 200-day exponential moving average. So for a few months, we can expect some sideways movement in the stock. But yes, the downside seems to be very limited from here on price-wise. And once it shows a breakout above 650, which is this 200 DMA, then one can expect a level towards 760, 770, which are the previous swing highs. So I would recommend to continue to hold on for a bit mid to long-term perspective for potential targets around 750 to 770.
Okay, just a quick check coming in for Shriram Properties as well. We have our ticker team who's flashing at the bottom of your screen. You can see it, that they've acquired a land parcel in North Bangalore, and this is at a gross development value of near 200 crores. So keep an eye out on that one. The stock is buzzing in trade. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll come back and solve more of your stock-related queries. So stay tuned in. Welcome back. Thanks for staying tuned into your stocks on CNBC TV18. We still have our experts with us, Ruchit Jain as well as Sharad Avasthi, to solve all your stock-related queries and answer them for us. Let's keep it going with the query. Next query is coming from Nimish Seth, who's writing to us from Gujarat. He's holding 15 shares of Bank of Baroda, and this is at a price of 240 rupees per share. Wants to know if he should continue to hold this or look to sell. So one more of those banks coming in there. Sharad, your view coming in today. It seems like a lot of banking names there.
Yeah, they finally seem to have come back in favor, particularly with the PSU banks. I think the valuations are attractive even here. Again, something which is trading at 0.91 times price to book. Next year's accretion and this quarter's accretion after adjusting for dividend should add around 40 rupees, 45 rupees roughly to the book value. The advances are finally expanding. This quarter number should be good. Next quarter also could be very promising based on the tax cuts translating into consumer durable or retail purchases. So I think all in all it should be a very good quarter. Treasury should also start contributing next quarter. Part of the contribution we have seen in Q4. Part of the contribution from treasury gains should be visible in Q1 also. And this time probably Q1 might also abruptly show you some advances growth, which could be very promising. Generally, Q1 is a very slow quarter. So we are considering, 1.1 time price to book easily available to Bank of Baroda to start with. Optimum side could be 1.5 price to book. But considering even 1.1, I think 310, 320 would be your fair value first up on Bank of Baroda. So continue to hold with that target in mind.
Okay. And Bank of Baroda for you on the charts and technicals, Ruchit, is this also one of those banks where you have to switch out of it or continue to hold this?
No, I think one can continue to hold on because we have already spoken in detail about the entire sectoral view, which is positive. So I think the stock has potential to rally towards 280, 290 kind of range, which were the previous swing highs. So Bank of Baroda, SBI, Canara Bank, these are certain names which should do well going ahead.
Okay, that's a view coming in there. Continue to hold Bank of Baroda. Let's move on and switch gears now. We have a query coming in on LIC. We have Prithvish who's writing to us from Kerala. He's holding 30 shares of LIC. This is at a price of 800 rupees per share. So right now the stock is just trading almost near their buy price, not much of an uptick. But wants to know if he should continue to hold this, look to sell this one. LIC, your view coming in, Sharad, on this one. The insurance space, what is your overall sector view as well as specifically LIC? Is it a good bet here?
For the sector, I think we hold a very promising view. I think India is still very underpenetrated in terms of insurance. Even after the tax relief not being given in the new regime, I think even then the way insurance penetration needs to grow along with urbanization and rising per capita, there is humongous space to grow and for all the participants. LIC being the largest player, I think they'll continue to benefit out of it. I believe on an embedded value valuation, this is the cheapest stock within the insurance space. The private guys are trading at 3.5 times embedded value, while LIC trades at less than 1 times embedded value. Our base case assumption is that after this listing and better corporate governance, etc., there is a high probability that LIC will start trading in the long term, at 1.5 times embedded value. That gives you a target of somewhere around 1500, 1600. So this is one insurance counter which I'm very bullish on. It is our top bet. And then on the private side, some insurance companies maybe. But in terms of upside, I think LIC presents a very good opportunity to invest at these valuations. A largest player, obviously, size advantage plays out. I think once operational issues are streamlined and a better, shareholder investor friendly face is put forward, there is high probability that the embedded value multiple goes up. And I think high probability you get 1.5, 1.6 times. So 1500, which is a very decent upside from current level. So continue to hold.
Continue to hold. That's a view coming in for LIC from Sharad on the fundamentals. On the technicals, Ruchit, what's your view coming in? Because I think somewhere last year, July, August, there was a high and then we've seen that fall coming in again for LIC. So are these attractive levels maybe that the viewer should look to add more or just continue to hold and wait for their investments to go up now?
So yes, the price wise, the stock has corrected significantly along with the broader markets. And on the longer term charts, whatever charts are available, 700 is a good support base for the stock, and the recent swing low also coincides around 700, 720. So I think here, the downside seems to be limited, and we can expect a slow and gradual move towards 950 to 1000 mark. So at current levels, if we want, then you can look to average out and buy some more quantity. maybe around 950,000. If the stock comes around 1,000 levels, then we can take a review again.
Okay, keep an eye out on LIC over there for those levels. But let's move on to the next query. This is a query coming in from Pranav Mandal, who's writing to us from Mumbai. He's holding 20 shares of HDFC Bank at a price of 1,900 rupees per share. Wants to know whether he should continue to hold or look to sell this one. Sharad, your view coming in on HDFC Bank. Now, we spoke a lot about those PSU sites. This is a private one.
Yeah, I think the same story again. The merger synergy should start showing now. After a long time, HDFC, even after being such a large entity, is targeting very aggressive growth rates. Once that starts showing in the numbers, I think there is a high probability that the price to book multiples get re-rated to the highs that it used to command earlier. Maybe not as much, but yeah, 3.5 to 4 times is easily possible. But even if we don't consider that re-rating and we consider that at 3.3 times price to book is a decent value, next year 100 rupee accretion should happen, 110 rupee. So I think your fair value should be somewhere around 2150, 2200. So continue to hold. I think this is a bank which is showing a lot of promise. And after every quarterly numbers, you might see much improvement. And a large entity, going for aggressive growth could translate into much better premiums at the market and price to book. If that happens, another 30% upside opens for you. So I think continue holding initially for targets of around 2150, 2200, and then we will review there on.
Okay, keep an eye out on those levels over there. Ruchit, your view coming in on HDFC Bank as well. What are your levels you're keeping an eye out on?
So we've already seen a long consolidation phase. If we look at a bit longer term charts, then since the month of August 2021 till this late December 2024, we have not seen any returns from the stock. So it was more of a time-wise corrective phase within a longer term uptrend. And the stock has recently given a breakout from that entire 3.5 years of consolidation. So that high top, high bottom structure has resumed, which indicates a resumption of the broader uptrend. Yes, the short-term momentum readings are overbought, so we might see some near-term pullback moves, but the mid-term charts are definitely very positive. So on the lower side, 1850, 1820 is a good support range for the stock. Hold on existing positions, and in case if you get any dip towards those levels, those would be good levels to take some fresh entry as well.
Okay, Ruchit, as well as Sharad, thank you so much for joining in with us today, because that was the last query. So thank you so much for solving all the stock-related doubts that our viewers have sent. And thank you so much, viewers, for tuning in to CNBC TV 18. Up next, you have Closing Bell, so don't go anywhere.